a sense of capital. Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Live Earnings. Your host of today, as always, is Julian. I'm very glad to have all of you in. Guys, before we go on, just a quick moment. Please let me check if the stream is working correctly and especially if the sound is available for you guys. Yeah, sounds good. Okay, I think then we can go on. Because just roughly 25 minutes ago, the earnings results of the cybersecurity company out of the US, SentinelOne, has been launched, has been released. And yeah, I've already went through it. I already know that the price was quite strongly hammered, but I'm very curious about figuring out what is going on, why that is the case, and if I share this opinion, and maybe you as well, so feel free to use the chat function of this YouTube stream, of course. Yeah, or if you not relate to this current after close price action. Before we jump into the details, a quick disclaimer as always: in the upcoming minutes, it's no financial advice, consultation whatsoever. There's no guarantee for correctness of the provided data. Make sure you do your own due diligence, process, research, and decision, of course, because at the end it's your destiny, your life, and your money, and you need to live with the outcome and the result of your decision. Yeah, you hear it a bit. I'm still in the eye of the hurricane, of the allergic flower hurricane. Yeah, so my nose is a bit affected by it. That's the reason. However, let's jump into the earnings results. But before, what is the company we were covering today? So it's called SentinelOne. It's a cybersecurity company. Again, they're headquartered in the US. And you can see here they are quite wide in terms of their products and services they provide. You can see they have one centered, all connecting platform, which is called the Singularity platform. And running on this, they have different services. Their legacy business is endpoint security, business like protecting, for instance, your notebook. Yeah. Then they have cloud security. You know, cloud nowadays is quite a strong driven topic, and a lot of people and companies try to step into it and use it as one of their trademarks, even though it might be not part of the DNA. In terms of SentinelOne, it is actually the case that they provide security solutions for clouds, and of course they have security solutions, which is the newest one for AI in terms of prompt security, and they have data and AI solutions. You can see the AI, which is called Purple AI, but as well how they work and how they store and basically let's say convert the cybersecurity data with different kind of data solutions. Yeah. So again, SentinelOne, to put it in a nutshell, is a quite comprehensive cybersecurity company, way less focused than other cybersecurity companies like Okta or Rubrik, but on the other hand, less wider than companies like CrowdStrike, which is the most direct competitor and strongest competitor, or Palo Alto Networks, or even Microsoft itself. Hi Ruben Miranda, very loyal that you dialed in again. Thank you very much for joining. And guys, as already mentioned, the results are already live. You can see them here, press release and the presentation slide deck. And I don't want to waste any minute of your time, and therefore I suggest we straight jump into it. You can see that's my almost famous Excel sheet I always throw on the wall, and I've already entered specific numbers out of the data which was provided by the management of SentinelOne for this earnings results. Yeah, and I would say we start with top and bottom line growth. In this term, or in this regard, we start with revenue, with the sales. And you can see I always compare these quarters, this quarter frequency change, so Q4 2025, Q1 2026, Q2 2026, to past year, the same quarters, Q4 2024, Q1 2025, Q2 2025. And you can see already I've entered the forecasts, my own expectations, and the actual results. So the official forecast of the revenue for Q1 2026 was roughly 277 million, a bit more. And the actual result is a miss. Yeah, you read right, it's a miss. And that's not that nice in terms of a revenue growth company or the SaaS company and the growth to strong hyper growth whatsoever company. It's not nice to experience a miss in terms of revenue growth, but that's actually the case in this regard. Yeah, you can see it's a slight one, but we want to see a beat. What I want to see is roughly 278 million, not even 1 million more, but even this they missed in this case. That's very unfortunate, because the main aspect why I'm invested in it is not the profit growth. It is an aspect, but more important for me is the revenue growth. And sorry, I will need not a lot of tissues today, so not because of the results or just because of the results, but again because of my allergic situation. So let's go on. And but what is going on with the forecast? They already provided a guidance. And you can see here, I want to see roughly 291 million, which is more or less like 20% year-on-year growth, and would be exactly the same like 1 year ago from Q1 to Q2, comparing the both forecasts, both guidances. Was 13.8 million. You can see now it's 1.2 million less, and that is exactly 1.2 million less compared to my target and the now provided guidance of 290 million by the management. I mean, it's not extremely low, but it's less than 20%, and that is for sure not a convincing guidance from my perspective. Yeah. So overall, we have a revenue miss and we have a forecast miss from my perspective. And that is clean red. It's clean negative. I don't need to waste any minute and moment in this regard. I see you use the chat function. I love it. I will later check again what is going on with the comments here and there. But first I try to get the head start and cross most of the details. And then check out what is going on, yeah? And then I for sure come back to your comments, and then we can have a discussion. And of course, everyone else who is present in the stream, feel free to be active or get active in the chat of the stream as well. So let's check out what is going with the profit side, and I can tell you that is already looking a bit better for sure. You can see that the first glance forecast was $0.02. They achieved $0.04. Yeah. You can see it's 100% year on year. It is solid. It's more stronger than my expectation. My expectation was they have a small beat by $0.01, but they have $0.02. So that's actually positive. But again, it's just profit and unfortunately not revenue. Yeah, so it's not that elementary or that it's essential then compared to the revenue side. But let's check out what is going on with the forecast. And we have here the guidance provided by the management of $0.07. I actually want to see just $0.03, so I think that's quite strong actually. You can see here, past year they compared the forecast of Q1 compared to the forecast of Q2 was just $0.01 difference, and now it's $0.05. So it seems like SentinelOne getting quicker profitable and efficient in their doing than expected, and that is great. So actually earnings per share and the outlook for the next quarter in terms of profit both looks positive. Yeah. So again, revenue is way more important for me than profit. But at least it's not both negative. I would say so far it's neutral till negative. Yeah. neutral till negative, because again, revenue is way more important for me, or more important for me. Let's go on. Hey, customer, I love that you use the chat. Kind of sucks. I can very, very strongly relate to this opinion, and I'm kind of disappointed as well on the first details, but I think, at least on the second glance, I didn't see any, or not everything was bad, let's say it like this. And we are currently working in an environment with very critical investors and analysts and everything, and the market in general is very serious about results. And if they are strong, very strong at least, market is honorizing it. But if they are negative, yeah, stock price get hammered, and in this case it was not enough, especially I think considering that the price rise the past weeks, which at least is something. But let's go on and dig a little bit deeper into the details. Oh, my nose. Yeah, revenue we already chatted about. You can see US and international revenue. Actually, later on in the earnings call, they will definitely, well, in the past at least, they always did it. They communicated about how much international revenue share was the case. And you can see the past international revenue share expanded from 37% to 40%. And I just now had the assumption, or used the assumption, it's still 40%. I mean, it will not be 45% or 35% from quarter to quarter. It will be still in the ballpark of 40% roughly. And you can see here, then we can check out US international revenue, what is going on with year-on-year growth. As you know, I always compare year-on-year in terms of the quarters. So I compare Q1 2026 to Q1 2025, and I compare Q4 2025 in this case to Q4 2024. So to remove the seasonality, that is very important for me to give some statements. We have here US growth and international growth, and it seems like international growth is slowing down a bit, but what is nice to see, and I assume really that might be the case, a result out of up and cross selling, because I assume the US market is already more saturated, already more covered with cybersecurity solutions. The reason why, in terms of players, I mean in terms of many of them are already customers of Palo Alto Networks, CrowdStrike, Microsoft, and or SentinelOne, you know. And I assume that it's increasing the US market by roughly 2.5% is actually quite a good sign, and I think that is resulting out of up and cross selling, which is nice to see that existing customers, if that the assumption is correctly, obviously, but if that's the case, then it's nice to see that the broader product portfolio of SentinelOne and the solutions they are offering and ramping up further and further, customers adopting to them and using more and more modules. I think they have 7 different product categories and 40 different modules in total. And it's nice to see customers utilizing it, because that's this up and cross-selling, especially cross-selling, so providing further products. I think it's a major target of a company like SentinelOne, and it seems to take place. So that's nice to see some details maybe behind the curtains. Unfortunately, gross and net revenue retention, they didn't mention or give that much information about it. What they have mentioned is, I've already checked it, that you can see it here, this bullet point, improvement year on year and quarter on quarter of NRR, so net retention revenue, for the larger customers. And that is nice to see, because I mean, they don't give an exact number. I think that is what they do at the end of the year. So they did this in the Q4 report. But you can see, I mean, it was past quarter 109%, so it will be now at least 110%, and that is nice. I mean, there might be some seasonality, or it's even better than, did they mention year on year? Yes, improvement year on year of NRR. Yeah, you can see, I mean, past year, it was 110%, so now it's not unlikely that NRR is 111% because it's an improvement, year on year. And then it's nice to see if that's the case. I mean, for me, that's a very important number because that underlines the theory that upselling and cross-selling taking more place. So you know that they are again active in the endpoint protection space, but as well cloud, as well as identity, as well as AI, as well as data, and of course AI protection, so AI bots and LLMs, but as well of course AI in terms of providing their AI, so cybersecurity specialists who are customers and users of SentinelOne can use the purple AI of SentinelOne. And I think it has already a attach rate of at new projects, new contracts with more than 50 or 60%. And I assume this tendency goes up. So that's great to see. And this NRR statement again underlines this. That's nice to see. Remaining performance obligations, they mentioned this in the past. This time not, so I ignore it. However, that is nice to see. Guys, maybe I need to put it as green because that's positive. That's positive for sure. That is what I love to see. Okay, and then we have very, very important number, and in my perspective, from my perspective, that's even a more essential number than the revenue itself, because we talk about a SaaS company, and in the SaaS world, it's very important to drive strongly and achieve high recurring revenues, annual recurring revenues. So contracts are most of the time always long-lasting contracts. You can calculate very well with the flows of money and sales and revenue, and so a strong ARR, so annual recurring revenue base, always results in strong revenue, and even though the revenues of this quarter wasn't the best, again, was definitely a miss, but annual the ARR, so basically the revenue of the future and the revenue pipeline in general looks very solid, because you can see last quarter it grew by 21.6%, and I think from my perspective everything above 20 is on the long term good. And this is nice because it looks like it's re-accelerating, so 1.1% more, and I'm not sure when I expected this the last time as a SentinelOne investor. So again, even though revenue was a miss, ARR is, from my perspective, kind of a beat and an upswing, and it's starting to re-accelerate. Not sure what is going on with the market, but again, I mean, might be my problem with, of course, when my position in SentinelOne is not that much worth anymore, But on the other hand, goddamn, it's cheaper than a moment ago, and in this case, just considering that, an ARR is a very, very important number. Very important number, because again, it's the future revenue from my perspective, and we already seen the profit side looks solid, as well the outlook, and revenue a little bit unfortunate, but who knows? Maybe they are sandbagging a bit, but nice to see that the ARR pipeline is re-accelerating with 22.7%. Yes, it is likely lower than the major competitor, which is way larger, working on a larger scale, CrowdStrike. But we're living in a world of SentinelOne and not CrowdStrike. This is what we need to accept. SentinelOne was in the past, there was this hope existing in the market that they are the, not pioneer, but now they are the ones who catching up to CrowdStrike and catching market share, and that is obviously not the case. Maybe here or there they win projects, and they have USPs, they have competitive advantages in some areas for sure not. And it is how it is, but it's nice to see that we're talking about a quite cheap CrowdStrike version, which might be a bit weaker, or likely is weaker in terms of the products, at least in some categories, at least as far as I understand it. But the price difference, so in terms of valuation, is way different, CrowdStrike and SentinelOne, and it's nice to see that this one is running now on a good scale, SentinelOne, and let's see what is going on with CrowdStrike. If CrowdStrike release results and they way more heavily reaccelerate ARR, even when ignoring new acquisitions of new companies or whatsoever, but really organic ARR is really strong and way stronger growing, okay, then we might have a problem. But on the other hand, still, that is a very positive sign. Yeah, that is what I like, and I like it more than the revenue itself, because it would not be worth that much for me if the revenue would now be very positive, the actual results of Q1 2026, and maybe the Q2 guidance by the management, but if the ARR, so this number, would be worse, would be negative, would be like 20% or below, that would be would create warning signals in my mind, and if you ask me, actually not that bad. Customers, actually it's not that, and not the 40,000 or 50,000 of the past, or maybe both. I think I've read it in the past at some earnings call results or whatsoever. Somewhere I read it in some kind of hopefully valid source. So you can see that roughly, if the numbers are correct, they had 14,000 customers in total. Then they went last year, 2025, to 50,000. And now that's the reason why it's an estimation. I just put 1,000 up so that I have the chance to calculate the other numbers. I think it will be roughly on the right track. It is not the game-changing number, but at least it opens me the field of evaluating other numbers. And that is in this case, something what I will talk about in a moment. Give me a moment, please. Yeah, we need to first cover the $100,000 plus ARR customers. You can see we crossed the mark of 1,700 customers. So you can see roughly 10.6% of it are larger customers. So they have many small customers. Very likely as well in emerging markets, for instance, or just in general, they have started with a high focus on small caps. That was just part of the strategy and how they opened the market. But let's see what is going on here. And past quarter it went up by 18.1%, and now to just 16.7% year-on-year growth. And even though it's not getting down that quickly, it is getting down, and I would love to see actually it's getting up. Yeah, because I expect cross and upselling is going on. I expect more customers going for more products of them. So already loyal customers decide to go for cloud security solutions of them, for instance, or whatsoever. And therefore, I would expect that they are transforming more and more regular customers into large customers, or the share of them is increasing. But that is somehow not the case. Yes, it is growing, obviously, and they're transforming one, but it's not accelerating, the growth, the year-on-year growth. So that's not that nice to see for me. That is negative. It's not difficult, heavy negative, but if that would increase this number from 18% year-on-year growth from past quarter to now 18.5 or 19%, that would be lovely, but that's unfortunately not the case. And obviously that is getting displayed as well and demonstrated by the 100,000 ARR customers share of the overall customers. You can see it's getting down a bit, at least quarter on quarter. Let's see what is going on year on year. Year on year it went up by 1%, now it went up by 0.9%. So it's not the most important number, but we would love to keep this level very high and to increase it. And then, yes, we increase it year on year. You can see 1 year ago it was 9.7%. So 9.7% of the customers have been 100,000 plus US dollars ARR customers. And yes, there's kind of seasonality. You can see minus 0.4%. And you can see now minus 0.5%. Yeah, but I like that they're reaching new highs. I want to see new highs, and I want to see that they keep a high level and they keep it somehow, but the decrease Q4 2025 to Q1 2026 is too strong for me. 1 million ARR customer year-on-year growth. Last quarter they mentioned a number which was 20%. Now they didn't mention anything, so we leave this out. Now we have some additional numbers, just nice to know, but not something which... actually it is something which I evaluate, which I consider. So we have here the revenue per customer. And you can see past quarter, it went up 12.2%. Year-on-year now 13.3%. And it's an almost an all-time high. Second largest one in the history. So that is nice to see. They're creating at least more revenue per customer, even though the large customer number is somehow lagging. But it seems, I assume, even smaller customers, for instance, they just rolling out very aggressively, likely currently the Purple AI. So the AI function and product, and I assume that especially smaller companies who don't have a big team of cybersecurity specialists, they are strongly welcoming this kind of solution because it saves a lot of personal resources, staff resources, and I can imagine that this already drives good revenue per customer actually, and revenue per customer growth. So that is nice to see. It's accelerating. That is good, and so I put this in green color and positive color and give it a positive rating. Now let's see what is going on with the ARR per customer, and this actually should grow even stronger because as I already mentioned, revenue didn't grow that strong, but ARR was quite positive from my perspective. Let's see if that's the case. Past quarter year-on-year growth was 13.5%. Now they achieved 15% year-on-year growth, so that's even accelerating a bit stronger, 1.5% compared to 1.1% in terms of revenue per customer. And that looks solid. I think that looks even a bit better. That's nice to see. That's nice to see that somehow they're getting out more of each customer. I mean, yes, there's some kind of inflation existing, and SentinelOne is as well confronted with costs, for instance, and costs not getting down as well in the world. Yeah. So it is important that it's somehow growing, but obviously if it goes up year on year 15%, 15%, that is more than inflation. What I really like actually is the utilization, again, to check out what is going on with cross-selling, so providing more products to the same customer, or customers are interested in more solutions than maybe 1 quarter or 1 year ago, and therefore I like this 3, 4 or 5 more modules using I think that is the right one. No, it's correct. But it's 1,000 employee customers. Yeah, okay, it is. So you see, they have even very, very small customers, very likely, if they just restrict this to 1,000 plus employee customers. Yeah, so I need to check it double to understand if I'm not doing mistakes here. Yeah, I like this number very much because this shows this cross-selling, how customers utilizing it and how the demand is growing. But they unfortunately didn't give new numbers to it, just the same ones they already stated last quarter, which are okay. I want to see some kind of development, and yeah, let's see what will go on if we got new numbers here. Gross margin gap. I forget to enter it, but we can do this together live. We have here gross margin. Gap gross margin is 72%, as you can see here. So let's head back, enter it, so we have it. And you can see past quarter year on year, it went down by 2%, and now it went down by 3%. So it's even accelerating. I mean, look, we have been on a level of 75%. Now 74, 73, 72%. So it's at least in the past 2 years or 8 quarters an all-time low. That is not nice to see, and that is obviously negative. Yeah. So gross margin doesn't look that juicy. But let's check out what is going on with the operating expenses on the GAAP base. And I always put this in the ratio of revenue. So we have kind of a share, obviously. And you can see already on the head number, operating expenses, it's crossing the 100% mark. So not unlikely, or let's say it's extremely likely that next quarter they go to a double-digit percentage number, like 98% or something like this. Not unlikely, I think. And that is nice to see. And now let's see where it is coming from. So we start with general administrative costs, and I mean, as long as the company is growing and they not, for instance, increase their stack of employees for just the general work, not for sales and marketing and not for research and development, but just for doing accounting or whatsoever, this kind of stuff, for instance, or HR. If that stays solid, or then already the share should decrease. And I mean, that is kind of the case, because the total number, it's decreasing slightly, but very slightly. I'm not sure if you can see it or not, but it's just 3,000 more, quarter on quarter, $3,000 more. But you can see it's 0.3% lower, so way stronger. That is nice to see. That's accelerating. So they're getting more efficient in terms of general administrative expenses and costs. Last quarter minus 2% roughly, now minus 3%. So that is lovely. That is nice to see, and that is a must, because here, especially in general administrative, there's a lot of room for improvement. Yeah. Let's check out what is going on with sales and marketing. And I mean, it's a very tough space. There's a lot of competition going on. In the past, a lot of times it increased, but this time it went down quite strongly. I mean, past quarter it went already down by roughly 6%, and now it's down by 11%. Yeah, so sales and marketing, not sure what is going on here with the expenditure, but it's for sure, you can see it's by far an all-time low. They're getting somehow very efficient here in sales and marketing. That's not what I expected, because of competition, and I expected that that do acquisition and selling more goods and entering new markets, this expenses will increase, but that doesn't seem to be the case, and more the opposite way, and that is somehow nice to see if they still stay competitive, and I assume they stay competitive. I'm not sure if it's about stock-based compensation it goes down, or if it is like they're releasing stuff, they're firing some or whatsoever, and reducing the staff count. Not sure what is the reason behind, but very strong. That is below 50% now, and that it made this strong move. That I think adds a lot in terms of profitability on the long run, if that goes on like this, yeah. And if again they stay competitive. Another story is in the research and development expenses, and you can see they increased quarter on quarter, and actually you can see past quarter it went down by 0.1%, and now it went up by 3.1%. Yeah, so it's re-accelerating. Who knows? I mean, they have this M&A stuff. They just recently in Q3 last year they acquired Prompt Security, which is LLM and AI bot security. Then they acquired Observo AI, yeah, and which is active in the data space to basically work more efficient with the data and the data service they provide to their customers. And maybe all of this to integrate it takes work, or who knows what is the background. I see it as an investment, and for this reason it is good, but on the other hand, we want to see that they're staying efficient and it's getting lower and lower, and that's not the case, and so I need to leave a negative rating without a doubt. Yeah. But now let's see what is going on with two numbers I have created. Yeah, and guys, so when you see them, take care, because not sure. I mean, it's more about, don't take these absolute numbers seriously or whatsoever. It's more about putting them in ratio and getting a feeling for it. Yeah. And what I do here is I just wanted to have a number which gives me a better idea about, okay, what are the expenses for retaining their existing large customers. So I used G&A, also general administrative, plus 50% of research and development. Yeah, it's a very basic approach. I know it's not 100% accurate, for sure not, but at least it gives me an idea. And then I want to have a number, what are the costs to get new customers on board, yeah, to acquire new ones. And here I used only sales and marketing, 100% of sales and marketing. Obviously it's not correct that 100% sales and marketing just do the job for new customers. It's as well addressed to existing ones. However, I used it like this, and the other 50% of research and development. So let's start with the price, the costs for keeping existing ones. And past quarter it went down by 4.9%, and now it went down by 1.8%. So at least it's getting lower, but less lower than past quarter. Yeah. However, it is an all-time low, and therefore I think keeping the customers seems to be quite efficient, and therefore I leave a neutral rating. The first neutral rating, I think, so far. Very, very uncommon, but sometimes I almost only leave neutral ratings, but this time it's different. Now let's check out what is going on with acquiring new ones. And I mean, okay, let's see. And here we can see that past quarter it went up by 17%, and now it went up by 45%. 45% seems like a lot. Let me check if the numbers are correct, guys. Because that seems a little bit give me a moment, please, guys. Give me a moment. That feels a bit... It might be the case, but... let me check this quickly one more time. Yeah, but it might be the case. It might be the case that is actually true, because it seems like the number of new customers is just, of the large customers, $100,000 ARR customers, it seems like it is just not that much. I mean, it's here in this case, it's 35 more. 35, and 1 year ago it was like 48. Maybe it was a strong quarter, but however, 35 to 48 as a base of new customers makes a huge difference in terms of, I mean, even though the expenses might get a bit lower, especially sales and marketing, but if the new customers New large customers are not that many. The costs getting diversified through a low number of customers, and that is not nice. And that results in this kind of 5 million for a new customer. Obviously, again, take this with a sort of grain of salt, so with some kind of distance in your own evaluation or consideration. But keeping the ones is solid, but getting new ones because of the low stack of new large ARR customers, the expenses seem quite high, very high actually this quarter. Let's see what is going on with the profitability. So we have here the net income margin on a GAAP base. You can see it's minus 28%. And now you could think, oh shit, that's not good. But compared to the past quarters, yes, it was already low with 23%, but many of them have been way higher, especially 1 year ago with minus 91%. So there are reasons behind it, obviously. But it's definitely getting closer to the zero mark. Yes, to minus 28% is still a lot, no doubt about it. But would not wonder me if we, through the whole year or at the end of the year, we can find a level of something like maybe 22%, 21%, which would be solid from my perspective for this business year for 2026. So this is, I like it. It's, let me check Q2. Let's keep it neutral. It's not the lowest one, but it is decreasing, especially year on year, and it's heading into the right direction. Let's check out what is going on with free cash flow, and this actually is an all-time high. Past quarter it went up by 3%. Now it went up by 2%. We would love to see it's getting even higher, but it's still increasing, and again, it's an all-time high. It's not an absolute number; it's a relative number. It's percentage, not US dollars or whatsoever. So there is kind of ceiling. Obviously, 22%. It's likely not the ceiling, but it's the highest number, and I think that is something what we should definitely rate in a positive manner. So I leave a green rating. So efficiency so far, okay, and you can see Rule 4 resulting out of, or as a result of year-on-year revenue growth, which was how much? Let's check it again, 20.8%. And free cash flow margin, which is 22%, so you can see overall 42.8%. And it's called Rule of 40 because for evaluation of SaaS companies, more than 40 is positive, even though it's just a, let's say, random KPI, But it's lovely to see that it's more than 40%, because a lot of times in the past quarters they haven't been above 40%, So we can't take this for granted, and that's quite nice. Past quarter you can see it went down by 27.7%, and now it's more or less neutral to 1 year ago, and it is solid from my perspective. It is solid. I like it. Let's see what is going on with the shareholder valuation, and here we address stock-based compensation or share-based compensation, however you tell it. As part or percentage of the revenue. Again, most of this is compensation which takes place, for instance, for sales managers as commission. And this is important that it's getting lower drastically, because if we're talking really about a high level at SentinelOne, yes. Many SaaS companies have this high level, but I don't think the market tolerates that too heavily nowadays. So it is important to put here some positive signs, and you can see past quarter it already went down by minus 3.5%, which is quite strong, and now it went down by another 2.9%. You can see it was more than 30% for a long period of time, and now it's for sure an all-time low, and I like this very much. I like this very much. That is positive, and that's an important number, because there are companies out there, like for instance 2 days ago when in which they see Scalar, the other cybersecurity company, released their results. You see when you read comments on YouTube or Reddit or Seeking Alpha that many complain about the high stock-based compensation at Zscaler, and that they might never get profitable just on a non-adjustable level, always on a non-adjustable, just on the adjustable level. they get profitable, but really gap-based and everything, that might be very challenging with this huge amount of stock-based compensation share, and I'm completely can relate to this. And therefore, for me personally, it is important that they prove they're getting more and more profitable. Yeah, again, revenue for me is, and ARR is more important at this company for me. But on the other hand, it's very important that they getting closer to profitability and they're not throwing around with their money like whatever, and that they're getting lower here. I think that's a great sign, and quite strongly. I mean, I hope they can keep this level somehow and get even a little bit stronger, lower, let's say till end of the year to 25-24%, something like this would be awesome. I would love this. 25% would be for me already rock solid. 25% would be rock solid till end of the year. Okay, but however, that's for sure positive. And now we check out what is going on with the full year guidance. And you can see here we start with revenue, and it was the guidance by the management last quarter for full year 2026 was 1.2 billion, and it is still roughly 1.2 billion. So nothing has changed. It is neutral, and it basically means that we're still addressing roughly 20% year-on-year growth. Obviously, I expect that they will achieve a beat. I mean, now they already achieved roughly 21%. Next quarter, they will be roughly 20%, and I think they already mentioned it. I'm not sure, but I think they mentioned it, or it was just in my mind. But I think they mentioned that that this year is a little bit backloaded, or this maybe always the case in this business. So, which means that the first 1 or 2 quarters are a little bit weaker, and then Q3 and Q4 getting stronger. And I mean, you can see it already here in terms of profitability. Yeah. So this quarter forecast was $0.02, next quarter $0.07. Yeah. So there's definitely some development going on, and we will see this in a moment. We talk about EPS. Maybe we quickly cover this. The EPS target is $0.35. Yeah. So we just achieved only this quarter only $0.04. So in the next 3 quarters, roughly $0.31 or EPS on a non-GAAP base needs to get achieved. Yeah. So that means that it is very likely they increase this number very strongly. Yeah. And in general, somehow I see this. Yeah, it's a revenue growth company, but I have some kind of high hopes for the profitability detail of this company, because I think how the customer base they have it set up and how the overall company is set up, I have high hopes they can get very, very efficient with their AI solutions. Yeah, I have very high hope that this is the case. And then even though ARR or revenue is not growing that heavily, they might get very efficient on the midterm level. That would be awesome. So I can already tell you now, earnings per share remained untouched, so we keep this as well neutral. But what not remained untouched is actually the operating income margin level on a non-GAAP base. And before they stated like 115 million, or which means 9.6% of revenue. And now they stated something like more realistic 120 million, yeah, which is 10%. So that is lovely. So first of all, of course, we want to see and they make sure to not decrease their outlook and their guidance, yeah. But what we see here is actually they increase it, and that is really, really nice, yeah. That is really, really nice, and that is a good sign. Even though it's just profitability and not revenue, that is already a good sign. And we are just heading to the second quarter, you know. So that's lovely. Now let's check out what is with the tax rate. And tax rate remained unchanged, so we keep it neutral. And from my perspective, 17% seems quite low, so I'm quite happy with this. And then we have something which is a little bit similar to the stock-based compensation share, and this is the diluted weighted average shares outstanding. And of course, we want to see they're not diluting that much, yeah, because as you know, I mean, if you hold 100 shares and the company has overall 10,000 shares, and from one year another it has 11,000 shares, your 100 shares are not that much worth anymore, very likely, yeah, just based on this dilution which takes place. And here this number they want to show the audience and the investors, and I think they do this the first time now, as a past quarter already, but the first time they started to do this for 2026, that they address this topic, they focus it, and they show somehow, okay, we have awareness about it, we understand that we should not, again, drop that much money to whatever stuff for stock-based compensation of our staff or whatever. We need to be careful with it, because we understand that profitability is a big aspect, and this somehow is kind of taking place, because you can see past quarter they went for 352 million US dollars in share-based compensation, and now it's only 350 million. So it's for sure, I mean, it's for sure lower. It was now it's 2.7%, and before it was 3.3%, yeah. So it is for sure, it only seems like 2 million, but it seems it is likely really much. It is much, yeah. It's good for all of us investors, and it's nice that they corrected in a positive way. Looks very solid, and that is nice. Really, I can't complain about this, because most of the time full year guidance remains unchanged for most of the quarters, for most of the companies out there. And it's nice to say, in terms of profitability, it's already looking quite positive. Yeah, guys. So it started quite bad when we sum up all the informations and think about this earnings stream and this evaluation here, how it started. I mean, revenue, no matter of revenue itself, the actual result of Q1 2026, it was a miss. The forecast, from my perspective, is a miss. It's too low, so it started very negative in terms of revenue. But profit looks very solid, yeah. It seems like really they're getting profitable somehow. Maybe they will never reach revenue growth like CrowdStrike, never the revenue level of CrowdStrike, never some kind of product qualities or categories like CrowdStrike or Palo Alto or whoever. But who knows, maybe there's the chance that SentinelOne is the one company, the one cybersecurity company, which is really like I mentioned it at my thumbnail of the stream, a true value play, and has some strength, some hidden strength in the potential to get profitable. Yeah, I mean, there's a long runway, no question about it. You know, we are far away of GAAP profitability, for instance, and solid free cash flow each quarter, you know. But it seems like they're heading into the right direction, yeah. So again, when we put this together, this I already mentioned to you, that is neutral to negative because revenue is more important for me. And then we have here the details, and they mentioned net revenue retention is higher year on year, so which means from my perspective at least 111%. Maybe let me check this one more time, because for me that's a quite important number and I don't want to misinterpret it. Okay, so customer success improvement year on year and quarter on quarter of NRR of 100,000 ARR customers. Yeah, it seems like it's the case, and that is lovely. That is lovely. I like to see this. So going back, so that's very positive, because that means kind of cross-selling and upselling. Then we have ARR, and that is a bit the counterpart to the revenue. And again, for me, almost more important. For me, almost more important, because it's re-accelerating with roughly 23%, which is definitely not that weak for this company, what it is, I think, and what I at least expected. So very strong, and that puts already the revenue into a neutral level, just the revenue number count to neutral level. And then we have something which is actually not that nice, for sure not, and that is the 100,000 ARR customers in total, which is not growing that strongly anymore. It's growing, yes, it's an all-time high, but I missing somehow the speed, the dynamic, and that is for sure negative. Revenue per customer and ARR per customer looks good. Gross margin gap getting weaker. I mean, yes, all the operating expenses, let's say 2 or 3 of them getting better, especially sales and marketing getting better, way better, improving strongly. Keeping customers seems to be quite efficient, but getting new ones, because the new customer count of large customers is not strong improving. Doesn't look that well, guys. But now really the finish line is very strong in terms of net income margin. It's the second lowest, or second best actually, the second best of ever. We have the largest free cash flow margin so far, the best free cash flow margin, not by far, but it is for sure the case, so that is lovely. We have rule of 40, more than 40%. For some investors, for me, it's nonsense. I don't consider it at all, actually. But for the market, it might be important. What is very nice is stock-based compensation is getting down, and they adjusted their full-year guidance for 2026 in terms of operating income margin and diluted average shares outstanding at the end of the year, and that is, it's not that bad, guys, really. I mean, it's a bit unfortunate that the revenue is so negative, because then I honestly would provide it a positive rating, I think, and I never provided SentinelOne a positive rating, never, as far as I remember at least, guys. But now, again, neutral to negative. Then we had net retention revenue, NRR, which is nice, and the ARR, which is even more nicer, which is somehow neutralizing or compensating the bad revenue results. And then we have a bit negative, for sure, no question about it. But as well, we have positive. We have positive and we have positive stuff, especially when we look into the future. And for me, that means that I leave a neutral rating, and I think a neutral rating is very easy to leave here and very fair, It's absolutely deserved from my perspective. Not sure, I know the stock price is down heavily after closing, but I give my honest feedback, and my honest feedback is this, that's my verdict, Again, that's so unfortunate. The revenue is somehow lagging. Not sure what is going on here. But again, for me, actually, most important is ARR, and I love that it's re-accelerating. But let's see what competitors are doing, and if they achieve way more positive tailwind, then maybe this number is not that great, actually. But it seems like because of the ARR, for me, my opinion is that the revenue pipeline and sales pipeline remains strong, and because of all the expenses and margins and stock-based compensation, it seems to me that they're getting stronger profitable than expected, and they have, and by accident, by coincidence, it is the title of this video, but it seems really like there's a clear path to profitability. And that is nice. I like this. I like this very much. But it's definitely a risky situation, risky thing, and I don't want to lie because I don't want to sound too positive. I already read it with my side eye at the chat that someone seriously thinks about selling his position, and I must think about in the same direction, because next week on the 4th of June is Rubrik, another cybersecurity stock I'm invested in, and unfortunately, and I really hate it, that because the timing is so bad, I had it already past quarter. Which was it? Which stock I sold last quarter? Not sure, but one company I sold, I think it was SentinelOne. I sold it for 3 weeks or something like this, but decided to buy back, and just one day earlier or something like this, and it was not the case. What was the company, man? But I really thought about buying back some shares of Hims and Hers, and I was not invested anymore. But I needed some information and some time, and it was exactly the same bad timing like now, because my plan was, and maybe Ruben from the chat remembers it, in the past earnings live stream from, which was it, New Bank, I told that cybersecurity is coming, and for me, it's very important to figure out what is going on with SentinelOne and Rubrik, and if SentinelOne is not going well, I strongly consider to sell the shares and put everything in Rubrik, for instance. And now today, Rubrik increased heavily, primarily likely because of Snowflake results yesterday evening. They are both data processors somehow they are active in the cloud and data space, and that's the reason why I'm quite convinced by Rubrik, even though it's not a cybersecurity value play, pure play like SentinelOne, even though SentinelOne is not as well a classic value play, obviously, but it's a little bit more on the value side appealing than Rubrik. Yeah, and now the timing is kind of bad because SentinelOne down by, let's see guys, what is going on? 18%, guys, goddamn, And Rubrik, on the other hand, let's open this simultaneously, is up today, again because likely of the Snowflake results. By 7%. So both have been roughly 40,000 euros, so 46,000 US dollar positions, and now I have a gap here of roughly 25% or something like this, just one day to another, which somehow hurt. And the bad thing is for me in my situation right now, to tell you the truth, that I'm not even sure what I will do with SentinelOne, because again, the results are not that bad for me. I would love to see very strong results or very bad results for SentinelOne, because either or I had a very clear path what I need to do in the next step, to sell it and invest in Rubrik, or to keep it and be happy with it, and ride the wave. And now we have this neutral experience, which is a bit unfortunate, where I don't know if I should not, or maybe I should let my money work more efficiently at Rubrik, because I have some kind of conviction inside of me that the results might be quite surprising and strong for Q1 2026. But actually, I had this kind of feeling as well about the SentinelOne results. Not that strong, but I had it. And that's not the case. At least not very, very strong ones. However, guys, I give you the verdict. Now we go quickly to the sheet. It's the presentation slide deck. There's not that much to cover. And afterwards, we check out the first reactions of the market at Seeking Alpha. And of course, I will go through all your comments you have left. We have all the numbers here. We covered all the numbers. A part of 50% emerging products of ARR. But that was the case already in the past 2 quarters. I think that's not something that new. What we see here, net new ARR is strong, record. Yeah, that is nice to see. Getting more profitable, but my highlight number on this page is for sure improvement of the NRR year on year and quarter. That is nice to see. The 17%, I don't like it that much, but okay, they seem to like it. ARR growth accelerated for AI security, data and cloud in Q1. That's lovely, and I expect this totally in terms of especially AI security and cloud, of course, because, I mean, for instance, Google Cloud is growing with 63% year on year, and I think SentinelOne is next to other cybersecurity companies, Cloud Partner of the Year, Google Cloud Partner of the Year, and I think they have good partnership with them, so I hope they participate strongly out of the Google Cloud. Okay, that is nothing new. Prompt security nearly doubled ARR Q&Q, winning global enterprise customers. I think it's exactly the same like past quarter, but past quarter they mentioned like more than doubled ARR quarter on quarter. Obviously they can't keep this momentum quarter on quarter each year. I read something like prompt security, which again is this LLM or AI bot security tool. I assume that, which they have acquired, I think, in Q3 last year. I think that, or I read something like this. This is working likely on something like 10 million maybe ARR per year. So if they can double this 10 million now to roughly 20 million, I mean, it's not huge business, but it's not bad, because again, now they miss revenue by 1% or something like this, 1 million, and it makes already a strong difference, you know. I mean, obviously the market expected way more than just the coverage, but if prompt security alone can affect this positively in the future, might be good, might be sufficient. What they mention here, launched Purple AI auto investigations, delivering one-click automation and human-level reasoning at scale. Yeah, that's nice to see. That's not just AI chatbot function they offer, but as well more stuff. Then we have a lot of not that heavily changing. And you can see here new Wayfinder frontier services. So you see here the 4 different product categories and the different modules. But that is not that heavily changing. This all this TAMP stuff and awards and yeah. Today I think they have been rated from Gartner for endpoint protection solution as 6th time in consecutive years as a leader. CrowdStrike I think is always a bit stronger in terms of vision and execution, but check out the 2026 Gartner Magic Quadrant, which evaluates somehow the cybersecurity companies and their disregard, at least, the cybersecurity endpoint protection solutions, how strong the companies are in terms of execution and of the vision of the product scope, let's say it like this. What was this? Business value of Singularity AI, SAM, one of the significant aspects of SentinelOne Singularity AI SEM is that we can take the same budget increase our security posture. We also able to leverage. Okay, yeah, hopefully that's the case. I mean, they have solutions look with Purple AI, which adds value to the customers and some kind of serious stats. Then they have solutions for Singularity AI, and yeah, so they're definitely working on something. Yeah, it's not the case they keep their hands still. Revenue we talked about, ARR we talked about, which is quite strong, which from my perspective is quite weak. Net new ARR, and that's just the difference between Q4, Q1 and this one, which is this correctly? Q4 had. Okay, yeah. So this 44 million is the difference between Q4 2026 and Q1 2027. That's net new ARR is a classic number nowadays in the SaaS space. This is all what we have discussed. That is all what we have discussed. That are the numbers which are the same like past quarter. So it's for the full year, as you can see. So not nothing new, just $100,000 US dollar customer growth. And here we can see the adjusted guidance in terms of operating income. Now mid number is 120 million. And in terms of diluted weighted average shares outstanding, which is not 352 million anymore, but now 350 million. Now we check out what is going on with market reactions. Man, but 20% down is crazy, if you ask me. Maybe expectations and pricing was too high. But 20% doesn't seem to be reasonable for me. However, we go through the results. This one writing, I had the feeling this run-up was a trap. Might be the case. Same crap, different quarter. Yeah, I can relate to this very well. Oh man, it's not good to read through all those comments. That's not a lovely experience. If the growth will sink under 20%, bad news. It is not growth stock anymore. Yeah, but guys, yeah, revenue, maybe revenue now, whatever, but ARR looks good with 23% year-on-year growth. Or am I missing something? It is, I think, 23% year-on-year growth. Do we write it? I mean, and I'm not sure if I'm right or wrong, but I think in the SaaS space, at least from my perspective, and at least when we talk about a company you are invested in for the future of it, for the more far future, it's more important that ARR is nice and it looks solid to me. Yeah? So I'm not worried that at least very, very soon, which means this year, maybe not even next year, they will cross 20%. Huge loss as always, nothing to see here. Yeah. I don't know what I should use with this. Obviously, they will lose money. Nobody expected they will make money this year, you know, like doing profit. He's writing me, just sell before earnings, take the 10% gain and walk away. Every quarter this one messes up, I will think after earnings. Greedy me, this time it will be different. It's been a good momentum the last month. The AI story will play out. And this person, El Financiero, writes, greedy loses again. Guess I'm holding until it comes around. Yeah, and not sure if the right idea is to just keep the stock if you are not convinced by it. But I can relate to this very well. Even I thought today, Julian, SentinelOne went up like 35% or something like this in the past days and weeks. Maybe you should secure it, but look, if the results would be a slight better, yeah, a bit better, and the market would react positive, the same person or other person would completely state the opposite. Yeah, they would just tell why I've sold it. Yeah, if they sold it. So you never know, and that's part of the game. You know, it's part of the game. And if the numbers are okay for you or for me, then yeah, it's very unfortunate. It's 20% down because you don't want to see this steep decline, obviously. And who knows what will happen tomorrow. But for me, it's, yeah, maybe it was a trap or whatsoever. But for me, it's not the 20% down earnings call, release, for sure not. And I would not be surprised if it recovers tomorrow a bit, at least to 100 to 15% down or 13% down, something like this, or even 10% down. But on the other hand, it would not surprise me if it ends with 20-25%. Yeah. But again, I don't think it's fair. And like Pakraban shares this opinion. Earnings beat and revenue was almost in line. I don't get it. Nelosha writes, easy, after years of hypergrowth, they're losing the grip of growing cyber company. Look at Palo Alto versus Checkpoint and see the difference between the growth and stock results. Yeah, but again, what is hard for me to catch is currently in this, which is really the tricky part, and I'm not sure if I'm on the wrong path or people who write this are on the wrong path. Yes, they are not a hypergrowth company anymore, and that is clear since beginning of last year, latest, if not earlier. It's clear. But they definitely challenged with declining revenue growth. But guys, what's going on? I mean, again, they look, past quarter, they achieved revenue of $1 billion, roughly $1 billion US dollars here, yeah, which was 22% year-on-year growth. And now, from the beginning, they just addressed 20%. I think they mentioned somewhere this year is backloaded, so Q3, Q4 will be stronger than Q1 and Q2, even compared to past years, yeah. That is at least what I kept in my mind. I'm not sure if it's true or not, but that is somehow I kept in my mind. And guys, yes, they didn't have strong revenue this quarter, but they didn't adjust the guidance, the revenue guidance for the full year into a lower level. They didn't told, oh, now we think we can't keep this 1.2 billion anymore at the mid number. No, they kept it as it is, and they would decrease and lower it if that's the case. They did this already in the past. So I think they stay confident. And I think they can because they see that NRR, net retention revenue, cross-selling, upselling is taking place. They see that the ARR is growing strong. You know, because the ARR is growing with 22.7% stronger than past quarter and with 22.7% stronger than the total revenue growth, which is addressed for the full year with 19.8%. So I don't see the issue. And that's the reason for me it would be an easy sell. I could easily sell all my shares of this company if this earnings result would be negative. No matter what the market would do afterwards, if it would be straight negative and disappointing, I would say, but I don't see it here. I don't see it. Yeah, I see that the revenue guidance for full year remained untouched, and they adjusted it in the past a lot of times to the negative level if somehow they missed or whatsoever. So I think they're still confident, and they can be likely. And in the opposite way, they adjusted in a positive way some numbers, especially on the profitability level, and the ARR, which takes care of the future revenue, seems strong compared to past quarter and past quarters because it's accelerating, re-accelerating. But okay, let's go on. Unfortunately for a SaaS company in this current market climate, inline might as well be a going concern. Less than double-digit growth gets a sell rating, and weaker than consensus EPS and ref guidance is equivalent to Share dilution. Yeah, share dilution. It is share dilution, but that's not nothing new, and nobody expected that share dilution will go down that strongly. Yeah, and yes, you can't if you're not growing strongly with revenue, and you're not making a lot of money whatsoever. You can't provide and dilute with shares your investors like you want. It's not. It's not like Make-A-Wish Foundation or whatsoever. So that's obvious. But for me, just writing share dilution, for instance, is not an argument. Yeah, because you can't invest into a growth company, and it is still a growth company, and just tell it's dropping because of share dilution. No, I mean share dilution is getting down, and they even put up their guidance in terms of outstanding shares. So actually that's positive what happened this quarter. That's my take on it. Duro Kalish writes, truly a patient tester, also had reservations of holding through earnings. Top Gun 2 writes, does the S stand for taste like shit? Gluck writes, lol, can someone just buy this company out so we can actually make money on it? Gap beats losing money. I mean, I think SentinelOne is not easy to buy out because the product portfolio is too wide. And those who might be interested to buy it out just need smaller pieces of it and not the whole cake. Yeah. Finished my take on it, so I don't think it's the best acquisition target, but who knows. And I don't think now is the right time to sell this company. Actually, I think they are active in a very interesting space. Tom Weingarten, the CEO and co-founder, and the team, they acquired a lot of companies, they launched new product solutions, and did a lot of work, I think, to be where they are today. And I think they had way more critical quarters in the past than this quarter. Yeah, as well better ones for sure, but as well less good ones, weaker ones. And I don't see it's now the right time to sell the company, especially when it's evaluated quite low, and you might see more upside in the future as the management. So why sell now the stock? Cofortam writes, good product, but what a bad stock. I think I'm finally cutting my loss after these results. The opportunity cost is too high. PBRM1 writes, stock-based compensation 75 million in 1 quarter. Yeah, 75 million in 1 quarter. And what's now? I mean, past quarter it was 80 million roughly, and now it's 75 million. 5 million down stock-based compensation. I don't think that's bad at all, actually. So you need to put it in a relationship, I think, in perspective. Yeah. Okay. However, that's it in terms of first market reactions at Seeking Alpha. Oh wait, no, wait, there was another comment section here. SentinelOne crashed after reporting in-line results and guidance. That just fetched together all the information, but I want to check the comments. So, Stock Realist writes, this stock never fails to go down, to disappoint. Yes, so many bullish, optimistic bloggers here on SA always singing its praises. Then Office Game writes, the market is looking farther out, not making much progress on ARR growth and much smaller than peers. Yeah, that's correct. Blue Scorpion writes, the stock is great exit strategy for insiders. Imagine you create stock certificates for 0 and sell it for 18, 15, heck, even selling it for 1 is infinite return. Crowd just destroyed them, and that is something what I can't take serious. Just based on the wording of it, I can't take this comment serious, honestly, guys. But what's interesting for me is really the content of this comment, the message. I'm really interested in figuring out what are the CrowdStrike results. And I see kind of a risk that if CrowdStrike provides good results, way better results, then SentinelOne might drop even further. That is something what I definitely need to consider, for me at least. Yeah, it's a difficult situation because again, I would love very heavy weak or very heavy strong results and not this neutral results for SentinelOne. And obviously the market doesn't like it at all as well, and that makes this decision very difficult how to proceed with SentinelOne. So I don't even know if I could keep it or not. But again, it's not the worst earnings experience ever. Okay, and now I will go through the. Wait, let me share this. You can take a look on the share price here on the top left while I'm reading through the comments. So Urban, you're right, I keep my word. Also, I don't invest on Sentinel. Still good to know what is in the space doing, for sure. Yeah, for sure. And I mean, cybersecurity is part of every one of us, of the companies we are employees of or whatsoever, or if you self-employed, you run your own business, you very likely need some cybersecurity solutions. So it's, I think, just in general, very relevant and very interesting topic and space. So customers, 27 customer writes, I'm honestly thinking about selling. I believed in this company for a long time and it finally started recovering, but the outlook just isn't very convincing. Results weren't bad, but the guidance. Yeah, but I don't understand the guy. What am I missing? What do I miss? Really, I mean, do they... Is the guidance... I think the market Q2 guidance falls short. Okay. They write Seeking Alpha, with a platform which I definitely recommend for you guys. At least I use it and pay my money for it to feed it monthly, and I use it a lot, so I like it. Yeah, I mean, we already discussed Q2 22 midpoint. You can see consensus. I want to see a bit lower than 292 million, but it's a miss even by consensus. It's a small miss by EPS. Even though I think $8 is, or $7 is not bad at all. Sure. Yeah. Q2, just based on the revenue guidance, and doesn't, at least revenue guidance doesn't seem to be that strong, but again, the full year guidance seems to be stable. They even readjusted the operating income and diluted shares outstanding, and the ARR is solid. So for me, it's really kind of an overreaction if I'm not missing something important. Okay, let's go back and go further through the comments. But what I want to tell you, customer 27. Again, I don't see the guidance as that bad, but I completely can understand that you think about selling the position, especially when you are already invested for a longer term. Again, I need to make as well a decision later when I brush my teeth or whatsoever and sleep about it. Latest tomorrow, I will make a decision. And I need to think about, okay, what might be the outcome if CrowdStrike reports good results. and more important for me, do I want to see the money at other companies? And timing is really unfortunate because as well Reddit I'm invested in increased quite strongly yesterday and today. So now when I would add position shares as well to this position of Reddit, it's more cheaper, more expensive than 2 days ago. Yeah, timing is a bit unfortunate now with this heavy drop here and the increase in the other stocks. But on the other hand, if they rise further, the other stocks, especially Rubrik next week, first day, then I will blame myself even stronger, and can't enjoy, even though I have good position in it. Yeah. Rumi, right, no worries, mate. I know the deal. I will sprinkle my comments. Yeah, nice, man. Then Ruben writes, after seeing the competition, I did not invest Parlo or even Strike. Felt better setups. And the lack of deals will kill a stock in this market. Yeah, I don't see it like this. I mean, I did, especially in the past weeks, and I already did this in the past months and quarters and years. I'm really not a cybersecurity expert, but I really see that it's not like you read customer reviews or whatsoever, and everyone tells, SentinelOne is the best by far, or what. That's not the case. But you really see that some customers are more happy about CrowdStrike, some more happy about SentinelOne. SentinelOne might have some beneficiaries in terms of pricing, for instance, and they have some USPs for sure. Yeah, and overall, no doubt, from my perspective, CrowdStrike in general is the stronger company. But for what kind of valuation? It's CrowdStrike can't afford to have strong missteps, not at all. And same for Palo Alto, but not that heavily like CrowdStrike. And obviously SentinelOne is not as well, but SentinelOne is valued so differently, so differently, I still think there is space left for another player like SentinelOne, or for SentinelOne itself, let's say like this. There's space and room for this company, and it can be successful. Need to find its path and run on a solid level, and I still have the feeling they're finding this path. The big question, I think, is, what investors want to see, that it's really, they're participating strongly now on cloud, on AI, and in general more cyber automation and whatsoever. SentinelOne is participating on it by increasing heavily the revenue and coming back to 25% or something like this. Then they getting stronger compared to CrowdStrike and can keep the same growth level. And of course, they reach profitability. And reaching profitability, I think it's the case. Reaccelerating ARR revenue, at least ARR, I think it's the case, even though it's might be not that heavy than the market expected it. Yeah, and being better than CrowdStrike, I think that is the big question mark. And SentinelOne lives with that's the destiny of SentinelOne, that they are always the second mover nowadays, or even the third mover. And competition is very strong in cybersecurity. I don't need to lie about this topic. But I think that throws quite a strong shadow, or can throw quite a strong shadow on SentinelOne, the performance of CrowdStrike. And there's definitely a chance that they experience stronger ARR growth or whatsoever, or they're not missing revenue, and then stock price even hammered down further. But again, that is something what I need to think about the next day. But what I want to tell you is, I don't see a big lack of deals or whatsoever. I don't think that is the case. I assume the competition is very tough and everything. But look, so many companies out there need cybersecurity, small, medium, large ones, enterprises, different backgrounds, governmental ones, private owned and run ones, and they have good business partner network. They have good business partnerships, maybe not as close as or as strong as CrowdStrike, but they have some. They have as well, for instance, a good partnership with Lenovo, and Lenovo rolling out currently very good numbers. So let's see. I would not underestimate their quality of products, and there is some space for them where they can work with. And they have as well, I think they had issues in the past with their go-to-market strategy, so how they access sales projects and basically try to acquire and achieve sales and finalized contracts. And I assume that's getting better as well. Customer UI, thanks for the video. Great job as always. Wishing you a speedy recovery. Respect for still doing the stream even while being sick. Yeah, thank you very much. Appreciate. I mean, it's not like flu or whatsoever. It's just really these flower, pollen allergic stuff which many people have nowadays. And it's a little bit uncomfortable, but it's not affecting heavily my life. And you see now the pill I took is already working, so it's working in the right direction. Your wishing, your good kind of words helped me for sure. And actually the stock price seems to be quite stable now at 18.5%. But again, if you would ask me, I would expect that tomorrow people, depending on how the overall market acts, but if it's the market overall is positive, I expect that SentinelOne goes more like minus 15%, minus 13%, maybe even minus 10%. But who knows? And if there are others like me, and maybe even I make the decision to sell my position, then stocks drops further. Simple as that. Customer, you're right. I'm really torn on this stock. Was down minus 36%. It finally recovered to minus 7%. Now this again, company still looks solid, but I honestly don't know if the market will ever appreciate it. And that's really a valid point, and in general the toughest question when we talk about SentinelOne. I mean, the question is how strong and how long must the breath last to bear all this pain as a SentinelOne investor, and really will it work out later on? Will there be kind of good yield later on? Difficult, very difficult question, especially considering there are other attractive opportunities out there. But don't forget, at least it recovered. It recovered in the past past weeks, and it's not down to absolute low numbers. So but let's see, maybe check tomorrow. What the first thing I will do tomorrow after waking up, I will check the stock price, and if it's down to minus 10% or something like this, maybe I will even think about selling it and think at least it's not down anymore 18%, and I will buy a bit more rubric and maybe grab and whatsoever. But I have right now the tendency, what I can tell is that I just keep it as it is, and hope for the next quarter, and more important, hope for Q3. That's the worst thing. Because it seems like it's backloaded, the 2026, and that Q3 and Q4 might be quite strong. I would love to see already now Q3. I'm not interested in Q2 that much. I'm interested in Q3 and way more even in Q4. But this is, that's not the reality. First, I need to survive Q2. Long runway. Okay. Then Ruby, right? Well, it feels these past months everyone decided to follow the add to your winners advice to the letter, and semi-trade consumed all liquidity, so portfolio bleed. Yeah, for sure. It's crazy momentum-driven market, and so much semiconductors, so much AI, cloud. Then customer, you write, happy I own Micro and AMD. Yeah, that's crazy. That's strong, man. Congratulations. I don't own it. Very happy for you. Room. No, but very nice. You can be proud of you that you own this kind of growth companies nowadays. And I hope you ride the wave perfectly and drop when you need to drop off it. Room, you're right, but it does seem the market is broadening and SaaS, fintech, etc. are catching a bit. Yeah, for sure. For sure. I mean, especially if war is done. I mean, not sure what will be the impact of it, but I assume that like the emerging market Southeast Asian companies or Latin American companies, they will recover a bit for sure. That's at least my expectation. And yeah, and I mean cybersecurity and already recovered, yeah, and some other SaaS companies as well. Customer, you write Dell plus 23%, nice one. Okta plus 10%. Yeah, damn, man, crazy. That's nice. Room, you write Dell is a Trump trade. Yeah, okay, that is for sure some serious tailwind. Then Room, you write drone stocks are also Trump trade. The US admin has given or will be given contracts and stock investments. Yeah, true. I think they mentioned 5 or 6 companies or whatsoever they will invest in, and it's it's this momentum situation is. Man, I'm a person I like to be not mainstream when investing, and I love to invest in a little bit more unpopular companies, at least a little bit more unpopular ones, and all of this kind of stuff. But it seems like now the current period really momentum is. Really, if you are the most uninformed investor and you would just open your local yellow press magazine and buy the top 5 stocks they promote, you would make most yield out of it. And for this kind of situations, I'm not prepared perfectly. But on the other hand, prices are low and you can buy and add more shares. So participating in the future might be the right approach. Yeah. Customer writes, yeah, I felt today I own Red Cat Holding. Yeah, you're right. Then Ruben writes, this is the capex cycle we are in. You need to spend money to make money, so no surprise to report more spending. Yeah, true. Absolutely true. But crazy how much they spent, and quite unexpected obviously by the market if they correct that heavily. In a lot of companies. Ruby, you're right. It means they are losing new customers to other cyber companies, so loss of market share. Shit, I don't know when you have left this comment. I assume it was about the large customer base or something like this, and the large customer amount of share. Then you write, if you're spending money on compensation, you ain't spending on improving or acquiring better products. It's another version of high dividend stocks in investing. Then you write, Ruben, I still think they are a second play in the cyberspace, 2 major competitors that can invest more into AI tools with more partnerships. It's an uphill fight. And that's a very good point. That's a really good point. Yeah. Sometimes I think about it when I think about SentinelOne and CrowdStrike and the overall cybersecurity space, but I forget this aspect very quickly. Maybe ignore it, but completely valid what you tell, that this uphill fight and not winner takes it all, but the stronger you get, you get stronger get. This eternal cycle of acceleration. Same when you tell nowadays the cloud players are the cloud players, and there will not be a new company which will be the next largest cloud player. Now it will be AWS, Microsoft, and Google or Alphabet. Same might be the case really with cybersecurity. It's because, I mean, cybersecurity, it was always the case, like the ones like McAfee or whatever, the solutions which have been quite strong in the past, like 20 years ago, they are not existing anymore basically nowadays, yeah, or just on a superficial scale, not that competitive anymore. And it's likely very, very important to stay ahead of the wave and have enough money to reinvest in all of this. And yeah, SentinelOne is cooking on a way smaller scale than Palo Alto or CrowdStrike or whatever. So might be challenging. Yeah, good aspect, very good aspect. I don't want to speak against it because I think it's a very good argument from you. That is something what I need to think about as well. Yeah, maybe I should think about this today in the morning, not now, after the stock dropped 18%, but however. Then you write DCA in discounted average here into rubric, don't let the lag control your portfolio. I've been cutting positions and been quite good from 4%. I'm up 20% year to date. Yeah, that's strong. A laggard. What is a laggard? I need to first wait, give me a moment. I need to check quickly. Give me a moment. I need to figure out what means laggard. Yeah, okay. Laggard. So basically this weak company which puts continuously on the brake pedal and keeps me away from making money. Yeah, I mean, in the past, one of my learnings was to cut companies, to cut positions, and be very strict about it. If really they have reached a point in time where you think, okay, your original investment thesis is not vital anymore. The problem is with SentinelOne, I'm not sure if that's now the case. Again, I see most problem with it is that if it's getting better, I expect that will be more likely the case in Q3 and Q4 and not the next quarter. Might be the case, but would not surprise me if the results are not convincing and the stock price not move. And on the other hand, Rubrik or whoever is really making some space. Yeah, but I need to think about this again. I still have the tendency to just keep it as it is. Then you write, but I also would keep in mind market conditions have been very concentrated. We saw broadening these past days, but still not enough to see money flow to all places. Yeah, for sure. But again, on the other hand, I see CrowdStrike results upcoming. Not sure when they will take place, but I assume next week. And again, I would not be surprised if CrowdStrike results are positive. SentinelOne even get more issues or more problems whatsoever. Yeah, but still, I don't see. Honestly, I'm not sure what the market expected. But if the price would be now plus minus 0%, I would not be surprised. Yeah, I would be surprised if it would be positive, and I would not be surprised if it would be minus 3% or whatsoever. But that now, after hours, the price is minus 18, 19%. I think that is direction is too strong. But again, at the end, the market is right. Yeah, and who knows when the point in time will come when SentinelOne is convinced about, or the market will be convinced about SentinelOne, if that ever will happen. Then you write, the fast horse wins the most. Yeah, might be the right case. Don't know. Might be the case, yeah. But you need to know when to jump off the horse, you know, when it's too old that they can't make any new races, you know, and this kind of stuff. And then, of course, the tricky part. Then you write, the reason why I did not buy was the rest of cyber are too strong or have better tools, and then Strike and Palo ran up and I went for Quantum. Yeah, Quantum is, I assume, not a bad choice. I think they told as well the US government that they will invest in Quantum, and so you have at least the support of the president, let's say it like this. Yeah, and cybersecurity is a tough space, for sure. Looking on Rubrik, on the other hand, you have something which might be a strong fit on the current AI and cloud development and all of this. But on the other hand, then there are doubts about do they have a moat? Because Rubrik doesn't have this large product portfolio and might be the best in what they offer, but still not be that unique, yeah, in terms of their solutions and their products and their services, yeah. Hard for me to judge about this, but yeah, no matter what kind of approach you have in the cybersecurity space, it is just a very, very, very tough space to interact in. But I understand your aspects and it's very reasonable. So then you write, my screening for SaaS has been to find. Hey, you're still active here. I'm almost through the comment section, but you write, my screening for SaaS has been to find their customers, because in this age your customers need to be AI resilient as well. If your clients can be replaced by AI, you're about to lose clients. Yeah, okay, that's a big aspect of the nowadays AI discussion, that's true. But I think that's not the case for SentinelOne. Obviously, some of the customers can get replaced, some of them are not. But who knows? I even thought about the idea. It sounds a bit childish or not thought about it, but I even thought about the idea that what will happen in terms of cybersecurity of robots in the future, for instance, and autonomous cars and this and that, and there are many new fields where as well endpoint protection or whatsoever, or at least cybersecurity protection in general, must take place. And I mean, we just start with cybersecurity protection. I'm not sure what your experience is in your professional life, but for instance, I experience more and more, I get more and more first-hand stories told about hacks. A lot of hackers or attackers using AI, for instance, nowadays to roll out hacks very aggressively, even if they are not skilled at all. But you don't need to have to be skilled when you can just cover a huge volume of attacks. And a lot of companies out there are not defending well their treasures, you know, their knowledge and their servers and clouds and whatsoever. So I think there's still a lot of room for improvement in terms of stepping up the game with cybersecurity. Yeah, and here as well we have this Anthropic Mythic project, and not sure if you know this, but you know, they leaked some issues with cybersecurity which have been open since 20 years or whatsoever, and different companies did partnership and joined the program, like for instance Zscaler or CrowdStrike. And I'm not sure if I know that SentinelOne somehow cooperates with Anthropic, but I think they are not still the part of this group, you know. and even there they are lacking, you know. So not that nice. But still, I think cybersecurity space it's very tough in competitive space, but yeah, maybe it's a too tough space. Who knows? Too competitive. But on the other hand, it's quite a juicy one, I think. Yeah. Rumi, right? Fun fact: Sentinel, Palo, Strike, all faced. Most of the customers are extremely replaceable. Somehow Cisco out of every cyber was the winner. A bunch of data centers and AI blaze. Yeah, it is interesting. It's interesting, but we will see what the future brings. Really, I think this AI topic is the future, is the present, but the outcome is still very questionable in terms of how general the society will develop. I mean, if nobody is, or a lot of people are unemployed, how does it work and everything? So that's a huge topic. We can discuss hours about it. Then Harolda, Haroldara, what's going on? What's going on with your comment, collega? However, then Ruby write, Laggard is a slow mover. Yeah, sure, man. Then you write, if the horse is gaining wings and is reaching the moon, yeah, it's time to take some profits. Yeah, who knows? Who knows? I mean, there are a lot of rockets currently reaching or on the path to the moon. But hey, I mean, people start already, and that happens a lot, as you know, compare it to the dot-com bubble like 25 years ago. And then when they compare it to the current situation, then others tell, yeah, but even if we are in kind of a dot-com bubble, maybe we are still at the beginning and it will run further 2 or 3 years and you will miss a lot of profit. Yeah, I mean, everyone needs this type of and style how he invests and how he feel comfortable. And look, I'm still feeling very comfortable about. I can still live with 18% minus, you know. It doesn't bring, you know, I will sleep well and everything is fine, all good, you know. So for me, I'm not the type of person, I think, who is the investor who jumps on the train, which is the fastest one. I'm not the fast horse rider, let's say like this. I'm not this jockey type of thing, you know. So, and the rise is not over today or tomorrow, you know, that is clear as well. Ask some people in the Bitcoin space, for instance, you know, which just recently start to invest in the past months or something like this, yeah. Yeah. So I'm more for the mid and long term game in it, and it was not like today I will make the big money with SentinelOne. That is not the case. I have still high hopes again for Rubrik because there is some stronger surprise factor existing than I ever expected for SentinelOne. Yeah, but it takes time in this kind of investments, especially when the market has strong doubts. You will never remove these doubts like from one moment to the other, you know. And SentinelOne is best example, like as well PayPal or whatever, for a company which is confronted with strong doubts, yeah. And sometimes it's more reasonable and sometimes less. Rumi writes, cyber is going to be huge, true, just who will be the players in 10 years, that's the real question, yeah, and it's a very tough question, man. And maybe it's really not good to be invested in the space, who knows, eh? Because I mean, there are businesses where competition will always be existing, like tough competition. Not competition is obvious, it exists, yeah, but tough competition, and maybe even in 10 years, maybe even in 20 years, there will be very, very, very present competition existing in cybersecurity space, and it will never be walk in the park, you know. It will never be that easy. And yeah, but however, give me 1 week. In 1 week we have Rubrik, Yeah, and I will for sure be invested in Rubrik till this point in time, and maybe then I'm 20-30% up and I tell, yeah, cybersecurity, fuck yeah, I told it to you. To everyone that it's good space to be invested. I mean, you tell as well that you are not against cybersecurity, it's obvious. I don't want to tell this, but or that's not my opinion about your opinion, but yeah. Let's see. And I'm still, look, it's already goes down a bit after hours, SentinelOne, who knows? Maybe it's up tomorrow, who knows? Then you're right, cybersecurity is going to be huge too, just to be players. Yeah. Then Laurie Sparks, hi Laurie Sparks, you're right. Painful to see this drop, but still holding strong. Institutional investment is waiting to buy the shares you sell. Yeah, I hope you're right. I hope you are right, colleague. I hope you're right. Yeah. I mean, again, for me it's a bit challenging to sell now SentinelOne after for me solid results, okay results, and okay valuation, and an 80% price drop. Yeah, but everyone, and you will be in the same situation, everyone who is investor, most of these people, they are not riding this horse since yesterday, and they are used to this pain, and that is the big issue, I think, that at least retail investors, private investors, to convince them to stay loyal to it and stay patient whatsoever. I think that is difficult if they already suffered a lot of pain. And I know this very well with this company. But however, again, still I have the tendency to keep my shares. I mean, I buy it in strongly at, like, I'm not sure what was the price, but it was like 10, 11 euros. 12 euros, something like this. So I think still cheaper than now, and so I will not add shares, but yeah, I can think about keeping it, and maybe even CrowdStrike providing good results, maybe SentinelOne will even participate, and the stock price will rise on this, and in general that the SaaS and software companies recover in the future, if that might happen. Maybe just because of this already SentinelOne is regrowing very well. And I'm currently having profits. Wait, let me check out, but I think I have like, so for tax reasons, not sure how is it in your country, but in Germany, yeah, I'm still up 13-14%, but it's a rebuild position. In my whole lifetime at SentinelOne, I'm for sure down very strongly, in the red very strongly, but since I rebuilt this position, I'm up 14%, 1-4, so on 4,000 euros, or let's say 5,000 US dollars, something like this, roughly. And I can avoid tax payment if I not sell it, but okay, fuck it. That is not an aspect. The amount is too small, the profit is too small. Wait, let's go back. Room, you write the bubble ain't the AI. Yeah, it's not the AI. Yeah, of course it's not the AI. Yeah. But in general, it's hard to fetch this kind of development, what is going on currently. It's very exciting. Even if I'm not invested directly, let's say directly in the hyperscalers or whatsoever, I think it's a very interesting time to be alive. And yeah, at least hopefully I will participate out of this AI and cloud growth by Rubrik next week. And of course, Reddit already kind of do it. Yeah, it's the case already. Then you write, Ruben, I just don't know enough about cybersecurity space and I follow what better investors teach. Invest in what you know. Don't pretend you know. Ruben, that you write, but I know the future has more network than now. That means cyber will be huge. Yeah. Yeah, for sure. And you can see it. I mean, network, yesterday Snowflake, for instance, which is very active in the space. I was... Oh man, so often in my life I talked about being invested in Snowflake, like already 5 years ago or something like this, and I always thought again and again to be invested in Snowflake, but the truth is I really don't understand it. I really don't understand what they're doing and how it works and how to compare it to Databricks or other players in the market. I understand it's kind of unique and whatsoever, but I really don't understand it. And then going for a tricky hypergrowth company, I can't make it happen. You know, it's not reasonable for me, and I can't argue it in front of myself. Let's say it like this. And so, I mean, I have this issue already with cybersecurity, kind of, because here as well I don't understand it completely in detail. For sure not. Even though I invested so much time in cybersecurity and still don't understand it at all. But again, I like very much the business case and how the players position themselves. But that's what I'm in core. Let's say the core investment theory is exactly what you mentioned. I think cybersecurity will be huge as well. And look, the world, I mean, it's not that large, but it's not that small as well. There are many, many companies out there on many different continents, in many different regions of many different sizes. And believing that just CrowdStrike and Palo Alto and Microsoft take all the endpoint protection market share, don't think that is that realistic. Maybe it will be the future. Maybe it might be Anthropic and AI. I don't think that will be the case. But yeah, there is the chance that this will be the case, but I don't think that's the case. And I still think, because it's kind of early and because of the approach of SentinelOne is quite modern, up to date, and they always followed the AI path, yeah. And now people understand what AI means. Managers understand it. You know, a few years ago, if you would tell them, look, we do cybersecurity with the support of AI, a lot of managers would avoid this based on the principle. And nowadays, maybe you get the deal based on the principle. It's completely changed. Wind has completely changed in this direction. And the truth is, yes, I mean, you can sell everything, and I'm quite sure CrowdStrike sales guys are strong as fuck, you know. I'm quite convinced about those account managers and sales managers and whatever, yeah, and business representatives, business development representatives. Quite convinced they are very strong and knowledgeable about what they are doing. But the truth is, SentinelOne was AI till the get-go, yeah, until 2013 or something like this, since funding. And maybe they did some stuff wrong and approached wrong whatsoever, but I think just technically, product-wise, they might be in the lead, but there are not that many doubts out there that, for instance, the endpoint protection is for sure not bad. You know, it's not a bad solution. And when you are quite close to a competitor, and you have nowadays references, you have enterprises as customers and smaller ones, you have stats and numbers, and you have as well other modules you can offer later on, and a serious fundament and solid base, and people and companies trust you, and AI is accepted or whatsoever. You can win projects, and maybe you not win the same amount of projects like CrowdStrike or like Palo Alto Networks, but even if you only win every third project or fourth project you are invited to join, or even 5th project, it might be enough. It might be enough. And then make sure that, especially when you have a lot of smaller customers, to grow with them together and hope they stay alive, obviously. Make sure that they grow and you upsell them and cross-sell them and this kind of stuff, you know. And parallelly getting more space with the enterprises, which I think is the most difficult part actually. I think achieving more room and getting more share in the enterprise space and the larger company space might be very, very tricky for SentinelOne, I think. But who knows? Who knows what the future will bring? But yeah, this most interesting aspect you have mentioned, I think, is really this uphill battle, that you always are the second mover or third mover, and working with complete different tool set and budget, and that might be that's for sure a relevant and valid aspect. You're right. You want to know a sad truth. I was in Snowflake but sold last month to concentrate positions. This week has been painful to watch Snow. There were a lot of problems with first security. Okay. I can relate to this. I mean, again, with timing, wasn't that lucky, and sometimes it is about luck in life. I wasn't lucky about HIMS last quarter. Last quarter, and I wasn't lucky now with SentinelOne in terms of the timing. Just in terms of the timing, it's a bit unfortunate, let's say it like this. Because again, I should not decide like this, but I'm a human like everyone here, and if rubric would not go up yesterday and today or the past days that heavily, especially today, maybe I could sell easier my SentinelOne position and reinvest it into rubric and into Reddit, for instance. But I don't think that's the major reason. I really think the major reason is because I'm okay with the results of today for SentinelOne, and that's not how I act. I don't like to how you call this wait, let me check this out. Does it work? Simple word, but not finding it now. I don't want to punish. Yes, I don't want to punish. You can see I checked it out. I don't want to punish a company for solid results, let's say it like this, even though the stock market is seeing it differently. That is for me a principle. I'm invested in companies and not in stocks and stock prices. And I'm always, my theory is, or my basic attitude is, or principle is, or my assumption, or whatever is, that if company is developing right, sooner or later price will adopt and adjust based on this. And I don't think SentinelOne made today a move into the wrong direction, more rather than into a right direction. It was a solid, neutral earnings experience. But with Snow, very unfortunate colleague. And I'm not sure if you understand Snowflake, but really, man, I did a camping trip in the past, like in a tent and this kind of stuff with my current girlfriend and everything, and spent some time at the beach and used my notebook to do some research. It was like 2 years ago, and 2 or 3 years ago, and I really tried to dig deep into Snowflake and try to understand what is going on, and I really failed. And I told myself, no, Julian, really, you can't do it, because you will never be convinced. And even now, I would never be convinced. I'm still way more convinced in SentinelOne than in Snowflake, because I have the feeling, at least I understand a bit more what SentinelOne is doing and what is the additional value, and can step better into the customer position and perspective. And Snowflake, I really have tough times to understand it. Really. And if tomorrow someone like Databricks comes and services whatsoever and has a better product or whatever, what kind of development happens, and Snowflake dumps down to whatever 20% of the former value, I have no clue if I should sell it or not, because I have no feeling for it, and because I have no conviction for it, or low conviction, and I'm more curious and interest driven. But yeah, again, conviction is low. Likely the outcome is I will sell, and this is not how I like to invest. You're right, there were a lot of problems with first security tools of AI. That's why it been slow adoption compared to other places. AI deleting a database because it misassigned a thread is not something these companies want. But also last year's strike had a huge downtime. If you remember, the entire net was out. Still it's up. Yeah, for sure. 1 year, 2 years ago, I think. Yeah, there already was as well high hopes that SentinelOne will now overtake or whatsoever. Never happened, obviously. Yeah. Never happened. And they could never use this outage, utilize this and participate on it, SentinelOne, compared to CrowdStrike. Yeah, but that shows as well how sticky this business is. Yeah, I mean, you can't change that easy a cybersecurity vendor from one day to another, especially if you are a customer of different modules and products, and that makes it so juicy. You know, it is really unseasonal. You know. Like, yeah, and uncyclical as well. So no matter if economy goes up or down, customers will likely stay customers of you as a cybersecurity company. And that is very special, you know, to have some IT software company with solid growth numbers, which is very futuristic, which has a lot of TAM and potential. And on the other hand, has quite solid ARR or secured revenue streams and profit streams. Profitability is another topic in the cybersecurity space. Yeah, but again, there is this uphill situation with CrowdStrike and SentinelOne, but still, I have a lot of notes about it. I see some potential that SentinelOne might get some kind of profitable and more profitable on the long run than, for instance, CrowdStrike. Even though the scales, the volume is not that strong like at CrowdStrike. But yeah, it already starts now. That's the reason why I called this video Clear Path to Profitability or something like this. I have this feeling that this path is existing actually, and they really find it somehow currently, SentinelOne. And maybe they find it even more stricter, more direct than other cybersecurity players, even larger ones. And we should not forget they told acquisition process of new companies is somehow finalized right now. They have now the product set up they always worked for, and now they can focus on sales, they can focus on implementation, on making experience and improving it a bit and everything. So I like that this is the case right now. Because I had always the feeling that SentinelOne had the issues to put the pieces together. I think what is still quite lagging strongly compared to competitors is identity security and cloud security, if I understand it correctly. And especially identity security, I would love that they're getting stronger, but I think they are quite weak compared to CrowdStrike. Yeah, but it is what it is. Okay, what you're writing this week has been painful to watch. There were a lot of pros. Yeah, and then you write, yeah, by your evaluation it was a neutral right, not a sell, so until conditions change, follow your plan. Yeah, but let's see. I need to take a nap, sleep and see what tomorrow, next day, or at the weekend. Let's see what will happen. You write Snowflake is like a warehouse for data. It's a bit esoteric. It's almost has no mode. It's very complicated. This is very complicated. It's like really like when you have no knowledge, then you tell just, yeah, it's complex, colleague. It's complex. Doesn't make sense to talk now about it, This saying, this statement, that it sounds a little bit like Snowflake. And I read it a lot of times. It's warehouse for data and everything. Yeah, but come on, man. I have still issues to understand it. Yeah, it's somehow processing the data and somehow I understand, if I understand correctly, make it more efficient. So maybe each file smaller, compromise it. I have no clue. Really, I have no clue. Yeah, it is how it is. I mean, I think part of Rubrik does this as well. I think they encrypt this data and shift it a bit so it's as well a little bit more compact, if I understand it. But obviously that's not the major part of Rubrik. Yeah, I mean it's a data warehouse, but it's a lot about data resilience and recovery when some incident happened. Then you write, yeah, you see it. It almost has no mode. It's very complicated. Yeah, I mean, I assume, obviously now explain it through the chat. It's not something I am asking from you, but. It has no mode, that is something, again, it's for me very hard to evaluate how strong the mode is or whatever, it's really hard to understand. I assume a lot of mode is as well the partnerships, that they're partnering with all kind of companies and have all the services and can integrate everything, and I think that's very important as well for Rubrik, for instance, and this is already kind of a mode, I think. You write, Ruben, for cybersecurity, look for agentic identity security is going to be huge for AIs to do their work. And I think agentic identity security, Rubrik just rolled out solutions and it's getting very strong. I mean, I mentioned, I think 2026 will not be the year that it will affect that heavily the results, but who knows? Yeah. Okay, guys. Let me check one more time the comments at Seeking Alpha. But it's a bit lower than 1 hour ago. That's nice to see. Wow. Was it already 20 comments earlier? I think so, but let's check. Okay, here for freedom rights, new CFO. CFO seems good and very informed for only being there a couple of months. Call was good. Yeah. I like it because I think when 2 or 3 quarters ago CEO announced that CFO will leave the company, it was very bad for stock price, and I love that they have now a new one, and I think it's important because I think they changed a few times already the CFO. It's important that they create achieve a stability. Yeah, but let's see again. I can live with the results. Oh, here, a new one in the chat. 7EO97. Are you still invested in SentinelOne or you plan to cut it? I'm sorry if you already talked about it, but I have just connected to the live stream. All good, colleague. That's the reason why I'm still awake, at least physically, but mentally I'm not sure how awake anymore. So I can't push this that further anymore, but just for you. Yeah, I'm still invested. It's my 5th largest position of 5 stocks. And it is like 15%, 15% or something like this of my portfolio. Yeah, and I already told the results, the evaluation for me is a neutral one. So revenue for sure I didn't like, but profit side was very solid for me. I liked the net revenue retention, so upselling, cross-selling I liked. I liked the annual recurring revenue development, and a few stock-based compensation and profitability aspects. What I didn't like was the revenue, obviously, for this quarter and the forecast for next quarter, the guidance, and the customer growth, the $100,000 ARR customer growth. I didn't like that much. But overall, it was quite solid call, and for me, way better than past quarter, past earnings results. And I told already, for me, it's a tough decision because not sure. I mean, I always talked about shifting the money to my other stocks, especially Rubrik, after the call. If this call is very bad, and if it's very good, likely I keep it. I just keep it, yeah. And now it's for me a neutral rating. It's a bit tough for me, so I have no clue. It's again, I'm just a regular private investor and sharing here my experience, yeah, and share the time with you together. I'm not a professional analyst, whatever. And so, yeah, for me, no clear decision yet. I have the tendency to keep the stock, and it remains untouched for me. But tomorrow and then the weekend, I will think about it, because I consider strongly currently two aspects or two events in the future. The first one is the CrowdStrike results. Let me check when will CrowdStrike announce results. Third of June, so next Wednesday. So two events in the future are interesting for me. That's the first one will be next Wednesday, CrowdStrike earnings results, because I have the concerns that if CrowdStrike delivering strong, maybe they deliver strong for whatever reason, that SentinelOne gets hammered even further, but maybe it's the opposite, and SentinelOne stock price rises after it, increase, yeah, goes up. And the next event is one day after, the 4th of June, when Rubrik, another cybersecurity company I'm invested in, release earnings results. And they have high hopes, and by the way, I had hopes as well for SentinelOne for this earnings results, but not as strong as for Rubrik next week, that they might provide a strong beat, because they have actually very good fit, I think, for cloud and AI growth. A perfect fit for nowadays, I think. They are very competitive. They mentioned they have 90% win rate, so quite the opposite to SentinelOne, very likely. And they are quite strong in sandbagging. Yeah, so results, the guidance, the outlook they have mentioned for 2026 might set up way too low, and they might surprise very strongly. So I need to think till Wednesday and Thursday if I keep the money or if I diversify it to my other stocks, especially Rubrik. But let's see. Rumi writes, Snowflake is building so many deals it might actually extinct itself by training the AI to be more efficient. That would be crazy. And bypass Snowflake completely. Some of these AI companies are creating the conditions for them to disappear. Yeah, that's true. 100%. That is true, 100%. That's a very interesting aspect, and it's crazy, and it's true. Even for cybersecurity, I talked a moment about, okay, when Mythic, the project of Anthropic, if they can leak so many different sources of potential cybersecurity threat in the future, and now they invite all the parties like CrowdStrike to it to find solutions to protect those leaked risks, yeah, whatever. That brings a lot of information to Anthropic, for instance, in terms of cybersecurity again, and maybe sooner or later they will have an own solution, whatever, super cybersecurity bot 2.0. But who knows? Yeah? I don't think that will be the first purpose for Anthropic and AI, but yeah, let's see. You will be right. It seems to me that cybersecurity stocks are all eating each other's lunch. Also, Zscaler reported the same problem with the guidance. Yeah, might be the case. And of course, again, it's very competitive. I mentioned this already a few times today and in the past. It remains very competitive. And yeah, I mean, I think Zscaler has this big issue with profitability and stock-based compensation, which you read a lot of times in Reddit and on Seeking Alpha and YouTube, whatever. And but they're operating on a whole nother scale compared to SentinelOne. I mean, as well, I think that 2027 revenue guidance or 2026 revenue guidance was not good at all, I think. If I remember correctly, something like 16-17% year-on-year growth. But again, SentinelOne has still a lot of room and is just shaped differently with all these products. It's different space, and it's not the end game for it. In case of Palo Alto, in case of CrowdStrike, I think it's just very natural that sooner or later you want to see that they're digging further into the profitability level, let's say sooner actually, yeah? And free cash flow and all of this needs to remain solid and getting more stable and positive. And I think SentinelOne, yes, is a unfortunate thing. They are not as close, even close to the volume of CrowdStrike or Palo Alto in terms of sales, but somehow the market is expecting as well that SentinelOne needs to right now needs to prove that they can reach profitability, that they have enough scale, they have enough sales volume and enough customer base and all of this to be profitable and be competitive. Otherwise, the stock will get hammered into the basement, And yeah, so I think that's a very strange and difficult situation for SentinelOne. But it's not, for me, from my perspective, the same like with Zscaler, yeah, just my take on it. Zscaler, I think, again, is already on this end level. Now customers really, it's not about, yes, revenue growth should be good and everything, but how long should they wait if they're now going for 4 billion revenue or whatever per year? How long should customers wait till they knock on the profitability side of life, And I don't think that is that urgent for SentinelOne. In SentinelOne, I think it's more important that they can start to prove they're heading into the right direction, and from my perspective, they're doing it. And on the other hand, they re-accelerate revenue, and from my perspective, they're doing it because ARR is now 22.7% year-on-year, which looks solid for me, even though revenue for this quarter or next quarter wasn't that great. Yeah, but this is what I can tell to this topic. Well, they all in competition. You don't need 2 antivirus in your PC. That's correct. But that is the case with a lot of stuff, I mean, you don't need cars from 13 different companies and computers from 14 different companies and drinks from 14 different companies and all of that, and still there's room for different companies, yeah. And cybersecurity space, my feeling is there are not that many companies, yeah. Yeah. I think I will stay invested. That is what I will do, I think. And I hope for okay Q2 revenue results, but for a strong or surprising good Q3 guidance. That is my target. You're right, Ruben. Yeah, Adobe was pumped up for their AI tools. Then they found out, oh wait, I can't do everything we are selling. So honestly, it's fun to watch. Yeah, it's crazy. And I mean, okay, when you are top manager, you live anyhow in a different space, you know, and have different daily experience and routine and whatever in work life. But it must be crazy to be in these positions nowadays. Must be crazy, seriously crazy. Wait, mate, I'm going to call. I have to work in 2 hours. Oh, yeah, colleague. Then it's really time to leave. I need to work in 7-8 hours. So for me, it's as well the right time to leave. Guys, wait. Oh, just some words about the last earnings, last earnings live stream we will cover together, and it will be, as I already mentioned, the second cybersecurity company I'm invested in, which is Rubrik. Already the stock price growth already very strong today, based on the Snowflake results, and already in the past weeks was quite strong development, which you could experience. Yeah, next week, Thursday, the 4th of June, the last earnings call for this quarter will take place with Rubrik. So I'm expecting really some surprise. I would be kind of disappointed if there's not really some big positive surprise, but who knows? I mean, we had today SentinelOne experience and wasn't that positively surprising as well. But however, if you are still interested in cybersecurity, feel free to join at this Rubrik live earnings stream next week, Thursday, same place, same time. And guys, do me a favor and make me smile. So if you enjoyed what you have seen here in the past 2 hours and 40 minutes almost, then feel free to leave a like to the stream and subscribe to the channel and follow me as well on Instagram. Highly appreciate this. I could argue why you should do this, but maybe you should just do it for your karma and for making someone like me smile and appreciate the work I put in. Yeah, even though it's not that much work. Streaming itself I enjoy, even if I'm currently a bit tired and I have this allergic stuff. But I still enjoy it with you guys, and I love to have interaction about the companies I'm invested in and maybe you are invested in. So it's a lot of fun for me, but still I would appreciate it. Yeah, man, Room, I appreciate that you join again. That will be Room this time. Let's see. I mean, I will this weekend. I will at my YouTube channel in the I call this wait, let me check. In the yeah, there's a post section. Yeah, there's a post section at my YouTube channel, and there I will definitely post an update about my portfolio, and you will see if what will be my decision out of, or the result out of this earnings of SentinelOne, if I shift and put the money into the other stocks or not. But the Rubrik position is already quite solid, like $48,000 or something like this. And I'm definitely feeling already now ready for the stream. I would get awake in a minute if it would start now. I'm very motivated for it. Everything is prepared, the Excel sheet and everything. First Rubrik live earnings stream. So yeah, really strongly looking forward to see you, Ruben, and of course everyone else who is interested into it. Guys, thank you very much for joining again. Feel free to like and subscribe. Would be a pleasure. And yeah, quick disclaimer as always at the end, like at the beginning, that in the past roughly 2.5-3 hours was no financial advice, consultation, or whatsoever. There was no or is no guarantee for correctness of the provided data. So make sure you're doing your own research process, your own due diligence, make your own decisions, your own money, your own destiny, and your own life. You need to live with the outcome of it. And yeah, guys, most important as always is staying healthy and taking care of your beloved ones. Way more important, I think, than money and stocks, even though it can be a lot of fun, of course, and open doors. Yeah, but take care of this, very important. And guys, it was a pleasure for me, and I'm very strongly looking forward to see you next time. Cheers and bye-bye. A sense of capital.